Testing. Still no sound, huh? There we go. All right, man. What's going down? What's going down? Let's see here. They ain't hearing this time. They get cut. Yeah, it's just set to pick up voice, man. I had some music coming in. Fucking it. What's going on, man? Happy Sunday. Weekends are for getting rich. There's a thinking stuff from which all things are made, in which in its original state permeates, penetrates, and fills the inner spaces of the universe. The thought in this substance produces the thing that is imagined by the thought. Man can form things in his thought, and by impressing his thought upon formless substance can cause the thing he thinks about to be created. Manifestation. Trading is a lot like that. We're trying to manifest something, right? We're trying to make something happen. And to do that, we come to these charts. Thing about trading and the markets and even investing is you're going to trade, invest your personal beliefs. There's no other way, man. This is why maybe a system or a strategy can work for one person, maybe not so good for another. Maybe you get stopped out early. Maybe you get nervous. There's a famous book by a guy named Van Tharp. I don't know how he says his name. He's like a, quote, trading coach. Guess everybody needs a coach, maybe. Michael Jordan had a coach, right? But in his book, he has a famous book called Trading Your Way to Financial Freedom. It's a little vague, and it kind of just, in my opinion, kind of spins you around in a circle. But the basic thing that he says is he confirms what Jack Swagger wrote a bunch of books. I don't know if you guys have read them, called Market Wizards. And it's about these different people that approach the market differently. We can have different belief systems, but you can't do all of them. You can't be all things. There's really only four styles of trading in the stock market. You know what? Right now, you don't even deserve indicators. We got to take them down. Got to take these indicators down. So as we look at price, this right here is the S&P 500, man. What do you do with that? So if I print this off and hand it to you and say, do you think it's going up or down? You're going to be like, I don't know. Looks like it's going up. Right? Looks like it's going up. But sometimes it looks like it's going down. It's easy to see it from the past. Shit, when you're right here, you're like, yeah, it's going up, man. Really? Were you thinking that over here? And so the problem is when you look at charts or ideas or strategies or people spend a lot of times you're looking in the past and you're like, yeah, that was obvious. And so people, maybe today you'll look back and say 2008 was obvious. How did you not see that crash? And yet they're not obvious, and nobody knows the future and nobody can tell. I don't know where the market will be on Monday. We might open down. You don't know either. You can guess. Flip a coin. You might be right. 30 for 30. Shit, heads up, tails down, right? Who knows? And so if you're a trader, what does that leave you? There's only about 4 kinds of trading. There's day trading, which would include momentum trading, breakout trading, where you're just trying to catch a move, trying to catch a bit or a piece. And this is a daily chart. If you're doing that, you're probably going down to like a 15-minute chart, right? These people are trading much smaller data. Make your money in the day. Maybe you don't lose. Hopefully you don't lose. You win more than you lose, you're going to make money. As long as your winners are bigger than your losers, right? That's trading. You know, you go back to a daily, and then out before day trading, we go to what's called swing trading. Means it lasts more than a day, usually. You're carrying it over, man. So we got day trading, we got swing trading. Swing trading is just what it implies. You're trying to catch swings. Swings. Price movements. That would be a swing down. That's a swing up, right? Swing down, swing up. Looks like a little pattern. Swing down, swing up, right? Swing down, swing up. Swing down, swing up. Looks like a little pattern, man. And depending on how you see when I was just saying, so as I begin to project a belief onto it, you can begin to kind of see it, right? You're going to get, you trade the markets the way you believe about the market. And so if you get out of, if you're not in flow with the market, the money flow, if you're not in flow, it's because you're trying to do something you don't believe in. That's all that is. You got to believe in it. That's what makes it work. It's how you can have a guy that's a scalper inside of day trading. We could go a little bit lower. You got the bottom, they're scalping, trying to catch 50 cents. Scalping it. And they might go to a 5-minute chart, all the way down to a 5-minute chart. So what am I saying? This is all fractal. You could buy 1 share, 10 shares, 1,000 shares, 10,000 shares, a fucking billion. It's fractal. The money flows to fractals, a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over and over. And so when I started trying to find what I thought were patterns that were repeatable, that might could give me an edge. You know, if there's no edge in trading, you're not trading. You're not winning anyway. You have to have some sort of edge, and you have to be able to explain it. Like, why do I think I could win at this, or why do I think I can make money? What is the overarching philosophy that makes what I do work? Like, if I had to spell it out in a treatise, if I had to write it down in a book, if I had to explain it for all how do you explain it? What is it you're doing? I'm just pushing shit on a screen. I'm just pushing buttons, man. So I got this little phone, and I download this app, and I just push buttons. I just buy fucking this whatever. That's what I'm doing. When do you think I should sell it? When do you think I should sell it? You guys are talking to me on YouTube like I'm fucking reading comments while I'm talking. Did you know I can go through a 2-hour class and read comments at the same time? Must be Superman. I'm Superman. Let's see. So today you can access with a phone, man. This here. That's the S&P 500. That's the S&P 500. Trades today at $435 for 1 share. You want one little tiny bit of 500 companies, it's $435.52 as of Friday. All-time high. right? You think it's going up or down? Up or down? Probably going to do what it's been doing. Probably keep going up, right? And so all these lines, what you see here on this screen, I know a lot of you know it, but I wish you really did know it. I wish you knew it real deep, like you were very intimate with it. You see those lines? That dotted red line, dot, 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 dot. Yours ain't a dot because you put it on your chart wrong. Why you need my new course, man. Yours should be a dot too. Why? Because it's a minor moving average. That red line right there gives me the average price of 5 bars. 1, 2, 3, 4, 5. The importance of this is 4 bars is all it takes to make a box. You ever hear me talk about a box? All that line is doing is measuring that right there. The average of that right there. And then when this new bar comes in, man, I wish you understood this like I do. When that new bar comes in, wish you understood this like I do. You see how it went down? Open, low, close, high of the day. Look at it. Right back to where it was, what? Beginning of the week? 5 days back? Now what is turning? You ever sit and do this? Just stare at your chart? Are you too busy? A lot of people are busy, man. Right? What are those moving averages doing? It's turning in, right? But they ain't crossed. They haven't crossed. They're all still numerically aligned going up. And until they cross, market's in an uptrend, right? But we don't know how high, man. How do we know? So we can't know. We already talked about that. We don't know. You don't know. Anybody thinks they know, or you need to get away from them because they're crazy. They're just making up shit. They don't know. They just have their beliefs. See, everybody trades the market based on their beliefs. So the way that I set my chart up here is based on my belief in the market. What I believe is important. What I believe will give me an edge. What I believe will give me insight into what is happening. Now, one of my basic fundamental beliefs, if these lines are on this side of the green line, it's going up, man, until the day that changes. And my job isn't to get ahead of that. My job is just to be in that. Just to go with it. Because I don't know. I don't know. Price will tell me. The price will tell you when it wants to go down, it'll start going down. So as you watch, man, you ever take a chart apart? Well, I wish I could take you through a chart. I'll take you through it. We'll go through it for 6 hours. We'll go back 6 years. We'll just start following it. We'll find all the stages and draw them out. You ever do that? You ain't never done that. Stop lying. No, nobody does that. I do that. Nobody just sits with their charts 6 hours or even an hour, 2 hours, not looking for buy and sell signals, just riding the flow of the price stages. Just take Caterpillar and go ride it for a decade. You ain't ever done that. I thought you wanted to be a good trader. I know you're busy. Right? A lot of shit going on, Gerald. I really do that right now. So, let's look at a stock. Oh, you guys ain't done that? Let's see. Let's look at a stock. I don't like to have this pre-done, man. I like to do it on the fly. I want you to think I made it. So as you begin to formulate this belief that you have about the market, you'll start to see it. You'll start to just see it. It'll just flow. This is all I see. Everywhere I look. Right? And it doesn't necessarily tell me where it's going. I can just see what it's doing. Right? I don't need to know where it's going. It's going up. You say, what do you mean? Meaning it's rigged, bro. It's going up. Not every single stock, because sometimes stocks go out of business. But the legit ones, the honest ones, good ones, the real businesses, they go up. And you say, yeah, that can't be true. All right. Let's see. Let's see if that's not true. That's the S&P on a daily. Let's take it to a weekly. We take our annotation and we come over here to the left side and go like this. Look, it went up. Right? Look, 435. Way down here. So that's what, 3-4 years? All right, let's go back 10 years. Maybe I don't know what I'm talking about. And I go over here and I put in and look, it goes up. Now, I'm not saying every single stock goes up. People misunderstand what I'm saying. I said the wave, momentum, the push is to the upside. It's to the upside. It's where it wants to go. So anytime it comes down, now the edge is in your favor. Right? But if you go and look at these, see, I don't know what you see, man. This is what I see. All I see is the money flow. And it happens. The stages, they last. This is so tight, I can't even draw it. They last different lengths, But it's fractal. It's on every. There's a runaway. There's a runaway. That's a monthly chart. So as we take this down, let's put in. Let's do Snapchat. Make up some shit. Take it from a monthly down to a daily. I don't know what other people see. Here's the thing. The reason I see this is I'm biased to see this. This is how I see all price movement. So I'm looking for the pattern in everything, man. I'm not looking for anything else. So when you say, what about volume? What about it? Well, don't you need a lot of volume? Not really. So volume's not on my list. You might say, well, you have to have volume. No, you don't. I don't need volume. I just need more buyers and sellers. Right? So if I'm swing trading and I'm waiting for a pattern of a box after a sell-off, and you say, wait, I thought we said we understood the pattern. So if the pattern is price moving in the 4 stages and I want to swing trade, shouldn't I buy that? And what is that? That is at least 4 candles or 4 bars that start to go sideways. Now, you've also got to take in mind, you don't know how far the legs go down. And so different factors can come into play. Like this may not be undervalued, but another factor that came into play is it had been here before, right? And stopped. And so one of the beliefs, and I'm jumping ahead, but one of the beliefs, I said you trade your beliefs. So you're going to look for your beliefs inside of the chart. So if you don't have these beliefs, it's going to be very hard to see shit that you don't believe in. So if I believe that price goes to where it was before and tends to stop, and if it does stop, then that confirms it. Look, it was there before. Did I know for bona fide fact it wouldn't keep going? No. And if it went to the next one, I assume it goes to where it was before. Why? Because price decides, not me. I don't know where the fuck it's going. Neither do you. Neither does Jim Cramer. Neither does anybody. If they did, they'd have all the money in the world. Anybody claims to be some sort of Nostradamus or can see where shit's going, why aren't they flying around in a helicopter? There is unlimited money in the stock market. If you had even the slightest fucking edge that you could consistently apply to knowing where something is going, you would be so rich, you don't need to talk to us on Instagram or YouTube. You would own a country. So nobody has that, man. Nobody has that. So we got to figure out a way to so guess what that means? You're going to lose. Let that sink in. Dude, I get people who buy a stock and lose money on it, and they're like, what happened? What do you mean? We lost. Yeah. Tom Brady loses too. Shit, Elton John played concerts and not many people showed up. Welcome to a fucking adulthood. Like, I have to explain this to you? This is a literal conversation I have on multiple daily bases. They're like, it went down. Yeah. You have to be as comfortable with shit going against you as it is for you going up. If you only get happy and excited about trading because the stocks went up, you are not a very good trader. Let me let you in on something. Stocks go down. And the only reason we can make money when they go up is because they go down. Let me say that one more time for the really slow kids in the very back. The only reason you can make money in the stock market is it goes down. You need it to go down. So when it goes up, guess what? I'm not that fucking excited because now there's no opportunity. The higher it goes, man, this sucks. So guess what? Now we made a ton of money in stamps, right? You know what that means? It's over. We don't get to keep making money in it. Get it? So this thing here, look. Did you make more money if you bought it here and we got called out? You made some money. Look, see where it was? From up here at this nice high to here. You still made money, right? But where did you make the most money? Oh man, it looks like down in here. So you're telling me, Gerald, you needed to do this in order to make this. Come on, man. Guy gets in Bitcoin. It went down. I know, dummy. That's how you get rich. It needs to go down so you can get more. You're trying to play the game too quick. It ain't about getting in tomorrow and selling it on Thursday, not in the money flow way. So the reason you'll be grinding on yourself is because you don't believe the big picture. Where's my coffee cup? You know, I put out these coffee cups, 10 pillars of success. Let's see. Seems like you should use these every day. Like you should have this cup in front of you so when you look at the charts, you would listen to what I'm saying. Pillar number 7 on the coffee cup of success, focus on the big picture. Now that don't sound like day trading to me. Let's see. Sounds more like big picture. What do you think that means? So now we ain't even put indicators on here, man. You guys don't. We don't even deserve them. Be honest. We should just sit in this. We should trade just with this from now on. Naked Forex. You ever see that book? Naked Money Flow, baby. No indicators. What stage are we in? What do you think the chances are? Let me just look at this. Just because I understand how it works. What do you think if we were to put an RSI indicator on that right there? It would be a stage 1. It would signal the possibility of a stage 1. Let's put an indicator on here. Come down here to indicators. And we're going to go to RSI. I got more people on the live than pre-ordered my new mini course. I find that insulting. But oh, we put it on the wrong end. RSI always goes on top. Why? It's the king indicator. Next to price. If you haven't noticed, I label these in order of importance. First is price. Then is the RSI. First is price, and then is the RSI. When I say price, I mean market structure, right? So this, the 4 stages of price movement. This is the pattern, man. If you don't believe it can do this, what I'm talking about can't help you, man. And as you dig down into this, that stage 1 is called accumulation, where price, they're being accumulated. Supply's coming offline. It's going into the hand of holders, people who aren't going to sell it. And it begins to accumulate, meaning they're not distributing it, they're not selling it. And the more and more people who buy a stock or a crypto coin or a token and decide to hodl, to hold it and not sell it, supply comes offline. That's called accumulation. And then there's going to come a point where a bunch of people want to get it, but there ain't that much supply. Bam, breakout. That's what a breakout is, man. It's a supply imbalance. Buyers overexceed the current supply at that price. For every buy, there's a sell, but at that price. Meaning there's a whole bunch of people that aren't going to sell you this at $435. You're going to have to go to $436 if you want to buy it. And then the next guy wants it and it's going to be $438. And that's how it works. And the more and more people go, it begins to trigger short-term momentum traders who come in. And then if anybody's short, they got to cover. That brings in buy orders. And all of a sudden you can have full-blown fucking breakout and prices on the run. And then other people are like, shit, I need to get in that. And that's how it goes. And then you're going to have people all the way up into here. And that indicator, we're on the wrong one. Look at this. So if you'd said, hey, Gerald, you think I should buy this stock? No, what the hell are you talking about? That right there is why you should. If you didn't know that and I taught you that, you fucking owe me a Christmas present. I just saved you a lifetime of heartache. See, there they go commenting. I don't know why you comment. Let's see. What did that tell us? That inside of our pattern right here, we come down. RSI, Relative Strength Index, 14-day. It's going to kick in this stage 3, alerting you you're coming into a stage 3. Now, is it for certain? Nope. But if you're swing trading, you better take your money. So if I was swing trading, where did I make my money? Buying up here where everybody's happy, woohoo, or buying down here when everybody's like, boo-hoo. See, all I see here is opportunity. And all I see up here is we're fucking done now. Fuck. Oh, did that reverse things on you? That's called getting on the other side of the cash register. So the only time you get happy about trading is when it's up. That's because you're not a very good trader. You got a limited mindset. You're thinking too small. We expect to make money, man. I expect it to go up. You thought it wasn't going to go up? So one of my beliefs is I only buy stocks that go up. And guy, what do you mean? I only buy them that go up. Well, how can you do that? Well, you could start with saying it. How about that? Well, we could just start right there. Look at gold. What if we just started believing that? Does gold do the money flow? Where do we start adding gold? Oh, right around in here, wasn't it? Started taking our gold off up in here. Now where we started adding it back? Over in here and then here. That looks a lot like what? Right? Which looks like what? You can't do that if you don't believe that. And it's not buy the dip. My man said buy the dip. It ain't buy the dip. It's not what it is. People buy dip don't know what the fuck they're doing. It's called buying the bottom. It's taking a position in the stage 1 accumulation zone of the box. It's more specific. So when I opened this morning and it said man can form things in his mind, you can only trade your beliefs about the market. All I see is the money flow. I don't give a fuck about a death cross or any nonsense like that. It is all nonsense. The only reason that wouldn't be nonsense is if you actually use that. And if you do that, then you can't use other systems and strategies. Get what I'm saying? You can't believe a little of this and a little of that and a little of this. That ain't how it works. All right? That's not how Buffett does it. Buffett doesn't go, well, I think I'm gonna do a lot of fundamental research, but then over here I'm gonna day trade binary short weekly options on Coca-Cola. He's not doing that. He's not running 45 strategies. He's not doing that. Now, if you have a computer degree in coding, okay, you're going to trade your belief about the market. I don't have that. I'm not a coder. I don't program computers. So I don't need to approach the market as if I'm not who I am. So what I am is observant. What I am is an entrepreneur. What I am is a guy that can spot patterns and see arbitrages. I can see when there's a value off, right? When there's a value proposition or a need for something, right? I can be intelligent. I can look and say, well, this looks like a very robust business, and I can read past 8th grade, so I can read most basic financials, right? And I'm smart enough to get a subscription to something that could give me the value of a stock. So when I ask someone, well, how much is your car worth? Nobody goes, I have no idea. No way of figuring it out. I don't know. Nobody does that. They go to Kelly Blue Book, pop it in. Right? Same thing in stocks, man. There are people who all they do is value them. And so if I can begin to spot this pattern of price movement, that's all I see. And if it ain't there, I ain't fucking looking for it. So if you show me a chart and it's like this, you're like, Gerald, what do you think of this? I don't think anything of it. It's not money flowing. Don't mean you can't own it, but it ain't money flowing. So what do you want me to say? Think I should buy it? I don't know. You got money? It ain't going nowhere. Why you want to buy a stock not going anywhere? I mean, so if I'm trying to swing trade, I'm not buying AT&T, right? Right? Oh, so now we got to understand market structure, different types of stocks, different type of sectors, right? Because that could affect our position sizing. We need to understand volatility. Is this stock volatile compared to the S&P 500? So if we're looking at this is gold, right? This is gold. How much gold is there in the world? You don't even know. How much is mined? No idea. You know, the higher the price of gold goes, the more the shit they dig out of the ground. There's an artificial, and you know, a lot of people talk about gold market being rigged. Shit, the miners are rigging it. If gold is so valuable, why the fuck did they sell it? You ever wonder that? All right, smart guy. If this is what I should buy and you can make it, like you create it, you dig it out of the ground, why wouldn't you keep it? I don't know. That's a good question, huh? I trade it though, but that is always a question on my mind. So where's my target? Right there. Why? Because that's the pattern. Price goes zoop, 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 zoop. Now, it ain't going to do it in a sideways straight. It might, but it's probably going to do it a little bit at an angle. And you say, what do you mean by that? Meaning it's going to, I gave you indicators again. I shouldn't have done that. It's going to go sideways and then up and then sideways and then maybe down, sideways and then rip up. Oh, hits our target, right? Hits our target. Bam. And then what's our next target? RSI. Bam. And then how much are we down? I don't know. Whatever you're comfortable with. The more volatile the stock, the more I'm selling. A lot of times people want hard, fast rules. What, 20%, 5%, what, 0.34674 divided by R? No, bro, just sell some. I don't know your portfolio. I don't know how big it is inside of it. I don't know what you're looking at, man. You know, you may not have as many positions as I have. If you're sitting 20% in fucking cash, maybe you could be a little less greedy with that and let it run, right? If you're sitting in zero cash and you need money for a new trade, Maybe you take off a little more. You get what I'm saying? It's not as 1, 2, 3, black, red, white. Like it's use a little common sense as you trade to know thyself, man. You're going to trade your beliefs. And there's times where like I'll call an audible and I say, hey, we're buying. And you're like, oh, what the money flow says. I know what the money flow says. I wrote it, man. But there's also being able, like there, you can add human experience. And when you just started trading, you ain't got none. So don't add it. Because the guy said, well, you got mad at me. I know, because you don't know how to trade, bro. You just started. So don't use experience when you just started. Learn the process of repetition so that you can develop experience that's based on experience, not just fucking feeling. You get the difference? Meaning, if I have a strategy, what if you did this? Let me show you something. And I bet you can't do it. Let me show you something. We'll see if it works on here. What if we just made up this basic strategy? Whenever gold was in a stage 1, which is, it looks like this, it went down, and then now it's going sideways. If anytime it did that and it broke above that green line, we got long gold, right? And we sold it when the RSI went 70. And we put a stop, however you want to do it, below support on, say, half the position. So that's our whole system. We just wrote it down. That's it. That's what you're going to do. And then I would come over here to overlays and I'd say, okay, I need a moving average. You want to read something interesting? Go read on Kaufman's moving averages. Very interesting. We don't use them, but it's still fascinating. He's a guy that created a type of moving average. We want to change it to 20 because we're in the money flow. Why 20? It's 20 days in a trading month. This is 1 month average. No, we're not going to let the computer do it. We're going to go solid line. All you guys with solid 5-day and 10 days are wrong. That's not how you do it. It's green. Push button. Why is that important? Because the reason this one is solid and the others aren't is this the King Daddy moving average. Period. 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 There is nothing, not a 50, nothing. This one. Now, if we look at this, and we just, and I'm just randomly, we just decided to do gold. This is not something I sit around thinking about. There's a breakout, right? Shit, that could be a minor breakout if we're just playing that game. And there's a breakdown. Now, we said we were going to buy when gold broke out above the 20. So you bought there. Now, we could back it up. I know we keep playing this game. I got to start somewhere, right? Buy it there. And then where are we supposed to sell it? Right there. You start taking it down, sell, say, half. And then when do you get out? When it breaks the 20. And then what? You wait till what? Till it goes into a stage 1 to do what? To buy on the breakout. And where are you going to sell it? When it hits our 70 RSI, which I almost guarantee you will be right up in here. Now do that from here on out for the rest of your fucking life. You can't. Most people don't have the discipline to trade. So I've been trading gold for 16, 17 years. Now I've missed trades. And one of them I missed was amazing. I would have made so much money, and I just didn't do it. It's not that I didn't know how. I have the fucking strategy. I've seen it work a bazillion times. Even if you bought over here, right? And you hit it when you took half off when it hit the RSI, even when it pulled back and stopped you out, you still made money. And so if you only traded it to the upside, on that strategy, it's only to the upside. Or cut it in half to the down. I mean, you got to figure out how to play it, but trying to get short is tough, man. You could play it both sides. That's fine. When you got the break, you would just reverse it. You're looking at the pattern, stage 4 decline. Put your stop above the stage that started you in the deal. Right? Now you're short. Just go short gold. It's very monkey simple. You got to have a full stop here. You can't hold a short. You can do it on a long, you can do a half stop, but on a short, you can't do it, man. Did you hear what I just said? On a long trade, you can go half, and I would go half because a lot of times you get stopped out and it comes right back. You know that. So my first hard stop would be half. I don't use them, but if I did, I would use a half stop. And then look, you're going to ride it down. The short game to me just doesn't do much for me because I'm an optimist. I see the future is bright. And it's hard for me to get on the dark side. I'm just not a short seller. I will short sell indexes as a hedge. And that'll bother people because I'll lose money on it. It's a hedge. You know what I mean? I'll put it on and I might take some off. But even on the short, what did gold do? Exactly what we thought it would do. Look, there's your stage 3, stage 4 decline. Where did it stop? Where it stopped before. That confuses people. These are pivot points. If any of that man, you got to get my new getting started with stock charts, money flow way. This is all it's about. This right here, man. I know a lot of you guys think you know the money flow, but it takes a while. You got to become like all you see when you look at charts. I don't see anything else. That's it. So I'm looking to spot the patterns. And I'm looking at this, and I got so much respect for this indicator, this RSI, that I have books on it. I have a book I paid $277. The dude wrote about the RSI. It's like 200 pages of nothing but the RSI, and it's like crazy town. Like, it actually didn't help me at all. But that's how into the RSI I am. And so each of the indicators, you know, the TSI is written by a guy named William Blue. Some of you may not even have that on your charting software. You know, I went and researched the guy, tried to figure out, is this dude married? What do he do for a living? Creator of MACD, you know, he ran a small mutual fund. I wanted to know who created it, why, how does he use it? He uses it totally different than I use it, which confirmed my idea that you trade what you believe. And so if you don't have a belief, or if you're new, you need to pick something that makes sense. It seems to make sense just to your soul, right? Seems to. Do this, man. What were we going to when I gold? So we can see how the RSI brought us this great value. Dude, look at this. Here, here, here. Oh, we're moving up. Mm, mm, mm. You guys say, what about this stock? Once you buy the book, man, you don't even have to ask me. You know what it is. Oh, right? It's about any stock, man. And then sometimes they get out of whack, man. They're not doing what they're supposed to be doing. They fall out of the money flow. But you see how pretty this one is? These big flowing, that's what you're looking for. Let's look at trying to think of some shit you're not doing. Good bonds. Now, let me show you something where it's not infallible to the upside or downside. Meaning, look at this on the RSI. These are bottoms, right? There's 3 of them, man. That one, that one, that one. Now, we're not trying to buy the bottom. Some of you guys do that to me. I'm not mad at you. But if you're swing trading it, don't be doing that. You got to let it set up, man. It's got to move sideways. So if you just jump on some shit because it dropped down, that's you're being overeager. That you can't. I mean, whatever. Like it's gonna, you know, whatever. If I'm swing trading it, I like to be patient. I want to see it go sideways, man. You say, well, it starts to go down again. That's all right. You need to see it go sideways, then down. Why? Because I know the turn is not coming until it does. And this is an example you'll hear me say. They say, well, you can't buy the bottom. I said, no, but I can buy all of them. Buy all of them. And then what? I can unload them on the way up. I don't know, you know. This is bonds. You're not going to zero. This is the U.S. Treasury bond. Okay. And then other indicators would clean some of this up. But you see how it bottoms and then what? It puts these pivot points, why they're so important. Now, as we add these minors, let's put the let's add the 20 on here. Again, it's a 20-day, not 18. not 12, not 13. It's green, no other color. Now, I was just talking about this. Some of this I'm repeating because I just did a bunch of videos for this new thing. You notice when price is extended right here? See how extended it gets? Price is way away from the moving average. This thing here is like a magnet. And at some point, they're going to meet back up. But when it's this far, a lot of momentum to the downside. It's really hard to trust any sort of buying going on in these zones when it's this far apart. Meaning, yes, that could be the bottom if we were looking at it. But man, I don't have any faith or trust in this until it starts to turn, which is why you see in the book, it's almost exclusively talking about the breakouts, right? Because that's actual confirmation that it's going that direction. When you're buying into here, that's what they call catching a falling knife, man. It's not going sideways. It's going straight fucking down. So to determine that and the quality, this gets subjective, but the quality of the box, I don't know that I've written about this, but the quality of the box, the closer it is to this green, the better the quality of that possibility of that actually going up is what I'm trying to say. These boxes that are real far from the 20 are very subject, not always, but just as a general rule. So if I know that, right, what can I do? I nibble a little. I'm not buying call options, right? Like you see how that could weigh my difference? I'm not buying call options. I'm gonna nibble a little. I need all this shit to come together, man. Because until these lines, and you're gonna see that 5 days. So this is where we talk about the trigger. So now as we start bringing all this together, like there's 6 components here, right? What is it we're trading? What is the volatility of the thing we're trading? That's going to determine position size, which would determine how much you nibble. How much you nibble. There's no commissions anymore. So in the book, I used to buy on stage 1, stage 2. That's because I got charged every time. Be $10 each side. When I first started, it was $30 each side. You guys are crying about 75-cent crypto fees. Shut up. You greedy bastards. It used to cost $30 when I first started trading. It was like $42 actually when I first started. And you called that shit in on the phone. And then it was $42 to sell it. So you're $90 down, dude. You guys are like, well, you can save 25 cents on Coinbase Pro. Yeah, all right, bro. I get it. Good for you. You saved a nickel. Congratulations. So that's not going to determine your, like, but every dollar counts. Okay. Yeah, I get it. And the only reason I say it like that is I get reminded of this 50 fucking times a day. Every time I post Coinbase, I got a bunch of broke people telling me, you'd save 50 cents. I know that. I'm not dumb. Okay? I don't want to use it. When you're rich, you can do that. Okay, I'll have 3 of them, please. When you start living in abundance and you have more money than you need, right? But fuck it, here's a tip. You ever tip the guy at the grocery store or at the gas station when you're leaving? Like you're buying some beer and it's like $10. And it's $4.50, or you throw them a 10 and say keep it. You don't do that. You've never done that at a gas station. You guys like what? They're not used to being tipped. Here's 20 for you. I got more than I need. You ever say that to someone? They don't even know how to look. It makes the room uncomfortable. What do you mean? Like, he has so much, he just handed it to me. That'll make some people uncomfortable when you talk like that, man. You do got more than you need. Yeah, man, tip him. Shit, tip a rich guy. Here, you look like you could use 100. I'm one of the world's greatest traders. I don't need it. What if you thought like that? Like that's part of your belief system, right? How would that hurt you to think like that? How would it hurt you to think abundantly? How would it hurt you to think, man, I could get like in total flow with this, man? So that's the bonds, TMF, right? So one of the things that I use to let me know, like, hey, this thing is really undervalued. Well, I got off track. Let's add the 5-day. It's a 5, and we're going dashed. Why? It's a minor moving average. It's red. Hit update. Most of you guys use candlesticks, I know, because we're playing Forex. Or that's what they start you with when it's start charts. They're slanted. Listen, man, there's PlayStation, right? And there's Xbox. There's Samsung and there's iPhone. There's bars and there's candlesticks. You have to pick a side, okay? And that's the one you do for life. You don't switch from Apple to Samsung. Neither does Samsung people switch to Apple. These sides are drawn. You drink Coke or Pepsi. There's some things in life you have to make a decision on. I do bars. At these crossovers. Oof. This bond trade's been something, man. I put it on fairly heavy over in here. The reason being, we're going to have one more moving average. 200 day. I want to show you something. Now you're going to play Xbox. I did not play Xbox. Let's see. We're going to go gold. Now the gold line there's the 200 day. This is used by banks and institutional traders to let them signify a bear market. Now we don't really care about that, but we do care about the further price gets down below this 200, the more I like this trade, even though it's sloping down, which is a really bad downtrend, right? And that becomes my target, which was previous high. So again, this is bonds, but let's look at oil. Like there's so much shit, dude. You can put this on anything. And you should be following. Oh, back it up. What happened? Put it on oil. Right now we know the direction of oil. Right, oil's breaking out. Look, started to sell off. Now it's breaking out again, above the green line, right? So what happens on oil when it gets above that green line? Right, call that one, and then down in here somewhere, right? What did it do? Went up, right? Bounced off, went up, went under it. And then when it came out, what did it do? Went up, came down. What happened when it came out? Went up. Then when it came down, it went back up. What did it do? It's going up. Where do you think it'll go? Up. You know? So until it hits, that gets green, I'm not really that worried about it, right? I just let it go up. Now, obviously, at some point, it's going to turn. But the point is, that I'm driving home, is when it breaks above that green line, it's going up. Like, that's the direction. So we just assume it's going higher. So then you could take a trade. You could place a stop here. You could set your target, and then you just let it be, right? You just let it go. Oscar, I see you. Oscar just did a pre. What a nice guy. Let's talk about the trigger for just a second. I go into a lot of detail on this, on the new stuff, trying to get you to understand the point of the trigger. The trigger isn't just crossing the 20 while in the money flow. That's primarily what I talk about. So there's a false breakout, right? Not infallible. Remember when I said you're going to have to get, if the tighter you're going to run your trading, you got to get used to losing. So we start with day trading, then we have swing trading, which kind of what we've been talking about. Then there's position trading. And position trading is, I don't get stopped out, or if I do, I don't get stopped out on the whole position. Like I just take it down. I'm going to hold some. Like I'm going to ride some Facebook no matter what. Like I do this with Twitter and a bunch of stocks. Matter of fact, when they come down, shit, I'm good. I'm looking to buy some more, right? And then when they get up and they get up too high, maybe I take some off. And then as they come in, good. I'm waiting for it to set up again. Why? So we can buy some more shit. And we can play this game from $26 to $200 over the next 10 years. Uh-oh. What about that? Are you going to be that guy going, oh, I can't pay $40 for Palantir when I bought it last time at 16. That'll just change up my screen. It'll change my price point. Nobody gives a shit about your price point but you. Who cares? What if this thing goes to $500? You're not going to buy any more because one time you bought it at $18? Like I hear people have this, they say this, man. So then how do you trade McDonald's to $200? Sometimes you're going to be paying $75 on a breakout. Sometimes you're going to be paying $52 on a breakout. Sometimes you're going to be paying $158 on a breakout. It's still McDonald's. It's still breaking out. So, but if you allow, well, last time then I guess you won't trade any. It's hard to buy houses when you're worried about what they paid in the past. I see this in real estate too. They'll be like, 2000. I was talking to a friend. He was buying a house. He was kind of pissed because he's like, dude, the guy only paid blah, blah, blah 4 years ago. I'm like, yeah, what's that have to do with you? Like he felt bad paying the price, but he didn't feel bad paying that price until he found out what that guy paid for it. Meaning he was ready to pay that price. But then the moment he found out that guy paid like $200,000 less only 3 years ago, all of a sudden he didn't like that price. That's kind of shit your mind does, man. Give you an example. Let's say you first started playing this stock over here. And you do like I do, you position trade, which means as long as this support area in here, I'm really not that worried. And if I just start a position, I don't care, man. Take it down. I don't buy stocks that stay down. I need to change my saying, I guess. I shouldn't say don't go down, but don't stay down. So every break below the 20, above the 5 was a little stage 1. And I would have bought them, and I did. That's a little different way of trading. I'm buying the stage 1, false breakout. Buying the stage 1, false breakout. Buying the stage 1, false breakout. Maybe the money flow doesn't work. Yeah, it works just fine, bro. Stocks get out of whack, man. They stop doing the money flow. And then they get back into it, you know? And even in this, the pattern of the flow, look, it's happening. It's just getting smaller and smaller and smaller, right? And then this one. And then what? Nice big breakout. And what does it do? It runs. What happens? RSI. Now you might say, what if I said, let's trim some? You'd be like, but I'm just now at break even. That don't have anything to do with the RSI or the 4 stages. It can still go down just because you're even. Right? What if you took some off though, and then it does come back down into here, and then we put it back on to then ultimately sell it up here? Now you don't have to. I'm just giving you an example how your mind and those numbers and what you paid for something will begin to affect you. You say, well, let's look at another one. I sold some of this one. They're about to kill my time on IG. So AYX, I might come back on. I might do the after party on YouTube. This is one I took some off. It hit the RSI, but I was still underwater. It's pulled back down. Well, I put that money into AYX. This could take weeks going sideways, and then something else will hit, and I'll put it back on if it's a true stage 1. So get comfortable. It's okay to do that. Matter of fact, you might get a little tax write-off on that, and then let that go sideways, and then put that money back on. That's a different conversation. But anyway, appreciate your Instagram. Hey, hit my bio link. I'm fixing to close that pre-order on my new little mini course. It ain't that complicated. It's good information. Well worth the $40. Be friends. Let's be good. Hold on, YouTube. This, how do I sign? Here's a link, bro. You can follow it. There ain't nothing to sign up for. You can apply. You got to apply yourself. This chart of we have a bifurcated market. If you haven't noticed, AYX came down in the tech sell-off, right? We saw it come down. Look, came down, and now we just been kind of grinding, you know, a little bit dip, gave us another chance to take some down. But it's not really going anywhere, you know? So we got AYX doing that. It's way undervalued stock. What else we got doing it? Fastly, I don't know, is undervalued. They've really downgraded this company, but it's trying to make a comeback, so let's give it a minute. It's doing the pattern. You know, it really hasn't joined the cues on the comeback. So if we look at, you know, look at Apple on the comeback, you know, it shot way up. So, I mean, look at this. Look at the, I mean, from everything we were just talking about, if you get to where you can find these boxes and do, it's very simple. And you get in flow with the markets. I mean, these type just become easy trades, and it's just a matter of what you're following, you know. But I mean, over here, even over here where it looks like it got out of whack, the breakout ran up, R-size signal, pulled back, and then just went into a box, you know. And then the pattern just gets tighter. Usually when it gets out of whack, the pattern just gets tighter. Like this is still the pattern. Look, sideways, up, sideways, down, sideways, right here. It's still the pattern. It just gets so tight that it's almost untradeable, you know. What we need is it to flow. So, I mean, this is crazy. Look at this. You know, if you look at that, you have a box, right? Price breaks above the 20. You have a very short box, just a couple days, right? And then price comes down, and then what? It creates another box, man. And then what? Breaks down, and then what? Goes sideways. And I'm talking about over here. So breaks down, goes sideways, and then what? Breaks out, runs up, and then what? Goes sideways, and then what? Breaks down, and then what? Goes sideways, and then what? Breaks out. And what we don't know, nobody knows, is the runs or the stage 2 markup, right? That's all this shit on this side of the green line. What we don't know on that is we don't know if, you know, how long that's going to last. We don't have any way of knowing. No way of knowing, right? Cannot see you from YouTube. Why not? A man says he can't see. You believe the children are the future? Teach them well. See to order spiral book, not get little paperback book kind. Keep digging, bro. So, I mean, the Apple flow here has been amazing. But look how far away, we are now. It doesn't happen very often. Look how far away we are. So you know, that's a top, bro. Just keeps going, I'd be shocked. So if you're swing trading, what are you doing? Taking some off, right? You got to get out of this trade. You got to start downsizing it. You're selling into strength. You're not selling into this. You need this to make you this. So if you catch yourself, oh, why are they going down? If they don't go down, you can't make the big money to go up. Get it? Like, you got to have these down days, man. You need these. This is what refreshes the market. And all of these are what make you the money. And if it's in Bitcoin, it's the same thing. So what is that? There's 3 components to trading, right? Mind, method, money. Mind, method, money. So part of that is the mind, right? The method, I mean, it takes a while to go deeper and deeper and deeper inside of the money flow, but so now we could add the 10. Add a 10 day. Now this 10, you got to make blue. It's a minor moving average. You got to dash it. Sacrilege to make it any other color. Now, I used to use the 10 a lot as a signal, and I still do from time to time, to take more of the trade down. You know, we didn't hit an extreme RSI up here, and we started to go sideways. And it's pretty obvious you're building a box in here. And so my fear as a trader is that it's going to come down and come all the way back to where it was before. What I'm afraid of, you know. Now, maybe I'm not. Maybe I'm a position trader, and I'm trading for a bigger payday. What I'm looking to do is sell it for, 270. Now, let me show you something that's kind of funny. Stamps is one of our position trades, right? And if you look on tip ranks, you put in stamps. I had it in the newsletter. I think I took it out. They had like 305 target. It was 320 at one time, and they took it down a little bit, which means it's selling. Whoever's buying it, they're paying a little bit of a premium for the stock, right? And so if we look at it, it's TMP. Now, we were position trading this for what? I was planning on trading it till it got to true value, man. When it gets to true value, I'm going to take it down. At least a half, maybe more. But it did it in one day, and they decided for us the game's over. They're taking your shares. Yeah, it works in Forex. It works in everything. So that's pretty interesting. The price they paid was true value. So one of the core fundamental things that I talk about in the money flow is where's true value. So if we look at, say, a DraftKings, I'm trading this stock. Now, sometimes they're not all going to be, this perfect or this easy. General consensus is stock's worth $66, 34% upside. And we know it could trade at a premium. It's a growth stock, right? But, if you were going to write a check for it, that's what they would suggest you pay. What was that price? 66? Put that on the chart. Let's find 66. Oh, wrong chart. 6. Come on, Gerald. Shit together. Let's see. 66. Right in there, right? First target will be right in here. Yep. So we're going to downsize it in here. We're going to look to take it down to a half position here. That's what it's worth. Now, how long does this take to play out? Shit, I don't know. Who cares? I mean, it's one of a few, right? And let's say it comes, back down, hangs out in here for a minute, and one of our others bangs a win. What could we do? Shit, we could buy some more of that. So Uber's one that I'm playing this game with. Uber. So a stage 4, you don't have to say, what are you going to do with Uber? Nothing. I'm going to buy more. But I'm not buying more the day it drops. I'm buying them what? On the stage ones. So I want to see it forming stages. So what gets me excited about it? Sells off. Let's do that on over here. Uber. Big sell off, right? Really far apart. First day we can take a knob. And then what? We start building the position. What are we in? Yeah, it's a sort of a stage 2, right? But what is it really doing? It's really accumulation. You get those stage 1, 2s that tend to run together. And the reason they run together is the 4 was so far down and the moving averages got so out of whack that it takes a minute. It's very common. You'll see that play out very common when these steep, it takes a second to get everything back online. And then what? Breaks box, comes right back, super bullish, man. So if I'm swing trading, my target's in this, 61 range? What do they think it's worth? 72, baby. That's 50, almost 50%. Come on, man. My man says all time frames to see the true direction. I'm gonna call bullshit. That's not the money flow, bro. Money flow is fractal. You can see it. There's different things playing out on all time frame. You can have a stage 4 decline on a 5-minute chart and be in a stage 2 breakout. How the hell is that the same? You might say, well, the minor time frame is down while the larger's up. Okay, you don't even need to go any lower. You can see that on a daily. So everything you need to see is on a daily. I know. People that disagree. Do you? It works for you. Yeah, you can wait and get your full 300 and whatever. That's August 7th. You could close it out now. And what if you rolled it to a stock that went up 20% by the time you're sitting there waiting on your money? That's the difference, bro. So, I'm still holding mine. Didn't really see anything to move the money to. But what if you took it right now, a couple dollars short, and you push it into something that went up big time? Then you'd be smart. What happens August 7th? Better do some reading, man. Don't come to church service uneducated. You're supposed to be doing your homework. I did a video on it, Weenie, on how buyouts work. My man says, Uncle Gerald, what parts did you like to trade when you traded Forex and why? I mean, just stick to the normal money flow, man. It's tough in Forex. You got to use hard stops if you're doing it. I don't know what time frame you're using either. I used to use a 1 hour a lot, but I like that idea. He says rolling stamps to Uber. I'm going to be doing some of that too, probably DraftKings too. Loki says he can't remember last time he looked at Big Bag, Uber, Space. Let's check in on Space. Space has been an amazing ride, huh? That is a crazy stock. We are topped out right now in Space. I'd be taking that down to about half my position. Don't mean it can't run, but it's never run this far before. We're on a weekly. I mean, good. It could break that, but man, I'm not seeing the big picture. That's a target. We hit our target. So I would downsize this and the RSI, be at half position. Let's see what it does. If it breaks this box, you could trim a little more and let it come back down. It's known for dropping big. So immediately. And they think about it. One day they might have 4,000 customers at 250,000 a seat. I'm thinking you ain't got many customers in the world left. But let's see. IDEX has been a disappointment. Now I've downsized some of these. I got out of workhorse. Out of workhorse. Right up in here. So far, smart idea, but I don't know. Maybe it's worth taking another look at. Let's see. I think the thing about workhorse that's getting to the analysts is they've been around for a minute. I guess they got $18 target or $15 target. You must have just raised that. Yeah, shit might be back interested in it again. Like IDEX, like Solo, still in Tesla. Like Solo, man. I cut workhorse. I'd made some money on it. Just cut it. Just didn't. Makes me nervous they don't have any customers, so I'd like to own it cheaper, not higher. Yeah, I mean, you're starting to roll over and run here. Coming together. So your downside target's $45. It's like you're going downtown, and so guys swing trading it for the first time here, and you buy a little here, right? You'd be taking some off here, right? You say, how do you know? Well, for one, you hit the previous high. Now, something that can be misleading is all of that's fine and dandy if we started all of that here, right? But what if you started buying back here? So I'll have people say that. They'll be like, well, since I bought it here, then, maybe I added some here and it's run up. I'm not, I'm not really in the profit or whatever. And it's like, I don't know what to tell you. It's hitting a target. So, I mean, you can just hold it, but anticipate it going down. If you were up, you'd be selling into that strength because it hit the target, right? So a guy who just bought it here and added on the breakout is looking to harvest gains. But the guy who bought it over here is like, well, I don't want to apply those rules today. Get what I'm saying? And you can. I mean, obviously you have that option. You can just be like, fuck it. If it comes down, I'm going to buy even more. Or I'm just going to hold it. You don't have to buy anything because it moves. You already took your position. You can just wait and watch it go through the stages, right? But in your own mind, ask yourself, if I would have bought here and here, would I be trimming here because it's hitting a target? And why am I not doing it just because I bought it here and here? Because what you're doing is you're trading this game where I don't, it's about the individual stock and not the totality of your portfolio and what you're trying to accomplish. Because let's say this does come down, and rather than out of some sense of ego of not wanting to sell some shares at a loss, you don't have the money to put into whatever, right? So you sit on this, watching it go down, 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 like it told you it was going to do, stage 4 decline, so that you don't sell any, So you got to ask yourself, is this strategic? Meaning I want to build this. I don't want, like I would with Uber. I want it to come down, bring it down. I'll buy more because my selling price is much higher down the road, right? And so I'm using these stage 4s to my advantage. Good, sell it off. But if I'm swing trading and I'm trying to get in, get out, make some money, you have to get fucking used to losing. Like you have to get used to being break even. Like not all trades are going to win. There's going to be a lot of losers if you're swing trading. You have to get comfortable with that. And if you're not comfortable with that, then you probably should back up. So we start with day trading. where you have scalpers and momentum. And then we go to swing trading, which is like a 3-day, 5-day, a week long, maybe just to a target, right? Like you're trading to here, previous high, right? That's what the money flow does. We tag the previous high, right? So when we break out and run up, what's the target? Previous high, right? So Uber, previous high is what? $59, $60. The next one's what? 62. If that breaks out, that becomes the target, right? But guess what? When that's the target, somebody new's buying it at 60. He has his own system and his own strategy. Isn't that crazy? We're all playing this game, but you're going to trade your beliefs. And so if your belief is tied up in ego of being right or wrong on a trade, or when you got in, or when you get, oh, I have to hold this because I'll take a loss. You already took a loss. Look at the balance. It's already down. It's already reflected in the price. And they say, yeah, but if I don't sell it, then I won't get. Yeah, but what if you sold it and bought something that doubled? Like, what if you had confidence in your ability to pick stocks, in your ability to take a loss? You know, like maybe you need to take one, but not in every situation. I'm just saying, ask yourself, am I doing this out of ego, or do I really believe this stock can go higher? And if I believe it can go higher, then good, take it down. I don't believe it can go higher, that we got a problem. He said, what is Ramp waiting for? Ramp might be waiting for you to put some real money in. Shit. Might be doing you a big ass favor. So when Ramp gets bought out, like Stamps or something, and we wake up one day and it's $85, instead of saying, what's it waiting for? You'll be like, damn, I knew I should have bought more. I knew I should have bought more. That's what everybody says. I knew I should have bought more. But when it was down here, you're like, why is it so low? And then it goes real high. I knew I should have bought more. No, you wouldn't. Or you'd be buying more. Why are you lying? So we play this little ego game. Market goes down. They're like, why is this stock going down, Gerald? Because it's trying to make you rich, dummy. That's why. That's why it went down. It's trying to help you out. You say, well, that can't be. Really? Let's look at Stamps. When was the best time to have bought it? Looks to me, I don't know. I'm not the smart guy. I didn't go to college like a lot of you guys did. I know a lot of you guys got degrees and shit, so you know a lot. I'm not the brightest guy, but to me, it looks like the very fucking low was the best place to buy it. Or am I missing something? Am I missing something? So if you guys says, well, why is this stock taking so long? Maybe because it's trying to help you get rich. What do we think about that? This is when I say mind method money, start looking at the way you talk to yourself and the way you look at trades. And the guy will say, damn, man, I wish I wouldn't have took any off on that. If I wouldn't have took any off at that target, like Gerald said, I would have made a lot more. So then you start talking shit about your own strategy. And then you're talking shit about it on the way up, talking shit about it on the way down, talking shit about it on the way up, talking shit about it on the way in. Then you wonder why you don't have confidence. I watch people do this. Oh, I wish I wouldn't have. No matter what happens, if it goes up, they're pissed. If it goes down, they're pissed. No matter what happens, they find a negative. Oh, I should have bought more. So they have a winning trade. It kills it. They do great. And their first response is something negative. Oh, I shouldn't have done that. Really? You shouldn't have? Shouldn't have followed the strategy like you're supposed to? I'm telling you, this is what people do, man. Well, I get, there's people, I won't even speak to them because of the way they act when the market goes down. They're dead to me. I'm telling you, they don't know. They don't know in space. Back up. Let's look at space. When was the absolute best time to buy it? After a big sell-off. So why are people happy about space now, but over here they're like, what's wrong with space? I wish space would hurry up and go up. I wish it would, really, because it was trying to help you out. It's trying to give you a chance to make some money. But they're not looking at it like that. Why? It's ego-based, man. Now they love it. We love this stock now. Really? Because you didn't like it down here. Now, not everybody. Some people get it, man. This is when you should love stocks, man. Fuck this. This is when the game is over, man. You're not making any money here. The money's been made. It's over. It's the point of the cash register. They're handing you to the credit card. It's done. Okay. Damn, if we could have kept them in the store a little longer, they might have bought some more stuff. You ever see how a casino operates? They don't want you to leave. Oh, you thirsty? Hold on, we'll get you a drink. Oh, what time is it? Oh, you don't need to worry about time, bro. Have a good time. Sit down, relax. Play some more. Why? They're trying to get more money out of you. Why? It takes time. They ain't going to just take all the money the moment you walk in. They could save us all time and they go, how long are you here for? You say 3 days. Give me 4,000. Cool. Why don't you just go home now? Save yourself some time. No, it's an experience, right? Stock trading ain't no different, man. So if you want to make big money, you better have big fucking patience. You know, or take extreme high risk in short periods of windows. I mean, you could do that. That's a possibility. You know, so if we're swing trading, remember we talk about day trading, you're going to have a shorter time window. If we're swing trading, we're looking for these boxes to try to buy the breakouts. And maybe we put stop losses in because we don't want to ride it down. Fine, if that's your strategy. But that needs to be your strategy. And if that's your strategy, you have to be good with losing. You have to be cool with it. Boom, cut it, move. I'll take $1,000 loss. Don't give a fuck. Next, please. Play the next one. Take a loss. Next, play the next one. Take a loss. Next, play the next one. Bam, 200%. Thank you. That's how, if you're swing trading, you got to be comfortable getting stopped out, man. Right? So now we go from swing trading to position trading, which is what I do most of the time. Meaning I'm buying a stock that I think is undervalued and I'm going to trade inside of the 4 stages of price movement until it hits true value. And then once it hits true value, I'm done. Or I cut it back to, say, like half. And so I have a shit ton of stocks like that just sitting there that I'm up hundreds of percent because they hit true. And then they just drift higher. Cool. That's fine. Let them go. You ain't got to just hold them. Next time they go on sale, it may be $50 higher. So the next time it's a stage 1 buy, it might be $50 higher than when you did it a year ago, right? And that's how you're going to play. If you're going to play for life, guess what? It's going to go up and higher and higher and higher and higher and higher and higher. So you have to get comfortable with that shit, man. You might pay twice what you paid last trade. Get it? So if you're playing with solo, last fucking thing you do at a penny stock is start looking at, well, my price that I got in. That's all ego. That has nothing to do with the forced. Nobody cares where you bought the stock. Nobody. The stock market doesn't. Warren Buffett doesn't. Biden doesn't. The Federal Reserve doesn't. I don't give a fuck. Nobody cares where you bought a stock. It's going to move within its movements. And so if it goes into a stage 4 and you're under, oh, well, it's going down. Don't care where you bought it. And so it'll hit price. It'll hit targets. This is the money flow happening. You may not want to participate in it, but if it goes from here and you're underwater and it runs up and hits an RSI, and I get this question every time. They're like, yeah, but I'm underwater. Did you read that anywhere in the book? No, because nobody gives a shit. Nobody cares. It doesn't change the fact the indicator's overbought. It doesn't change the fact that it's a breakout. It doesn't change the fact that it's moving inside of the pattern. You just don't like where the pattern started. You get what I'm saying? The pattern is organic. And so, man, I wish you understood the money flow. I do. I wish I could teach you. I feel like we don't even get going. I feel like we're still on. So as it moves, you don't care that you bought up here. It's being played out. So this is why you'll hear me say, that stock could have went from $10 to fucking $1. And if you understand the money flow, you can trade in and out of that bitch and keep trading it and then catch a big run. It might be 4 months from now. It might be 5 months from now on another breakout that you get all the money back from over here. You get what I'm saying? So the quicker you can remove your ego from all of this idea of being right and wrong, because you don't actually know shit. You don't know where a stock is going, neither do I. Nobody does. Anybody teaching that is full of shit. They have no idea. So I don't either. So if you're looking at this pattern, all I know is the pattern, man. That's a buy, that's a sell, stage 3, stage 4 decline. And what if this just plays out 5 or 6 months, coming through here, and then 5 months from now, you take a nice size position, and then it runs $18. Do you care what happened back here? No. So that's why pillar number 7 on the 7 pillars or 10 pillars of success, what? See the big picture. Big picture is it don't matter where you bought it, man. Flow's happening. And if you're going to catch a lot of fish, you need a lot of fishing poles in the water. So you need a lot of different stocks, right? Let's look at Solo. Yeesh. Weekly looks good, huh? Let's go to the daily. Let's put in here, what do they think Solo's worth? Oh, this one is not carrying it. It did carry it. Oh, the data up there is not working. So we got an average, let's say $8. We got 7, 8, 9, 12. Let's say $8. Well, shit, where's our big target? 9, 850. Oh my goodness. And look where this is holding. I didn't sell it on any on this stage 4 because I'm going for a bigger payday. So here's an example. This stock is actually, let's say they're wrong and it's only worth $7.50. That's 100% higher. So I'm looking to use these to do something. Now, if you'd have taken some off there, it's going sideways, sideways, sideways. You can always put it back. This is like a fucking month later, dude. And if in a month, we've gone from here down to here. Now, you don't have to. I didn't on this one because my intention was to continue to build it. It went down. So I'm not overly concerned about that. But if you're swing trading, if you're trading smaller money, if you see a better opportunity set up, this is when you do it. When a stock tags a previous high, it's probably not going much higher for very long. And look what happens. 2 months later, we still are not higher. So do you see how if you're just swing trade, like you could have took some of that money off, moved it to something else, and then shit, for all we know, that ran up. And now you're looking at move that back into here. And none of this is ego-based. This is just money flowing in, money flowing out. Right? And that's not taking a loss. That's allocating money to other areas of your portfolio. How the fuck is that taking a loss when you're putting money in to make money somewhere else? Different mindset, right? I'm not taking a loss. I'm not getting out of it. I'm taking some down to put what? In other things that are setting up that I think have better upside. Because this is hitting a high. It's hitting a previous high. Now, again, you don't have to do that. But if you needed money, that's where you would do it, right? You're doing it like that. Why don't you money flow with sales? Why is it always with buys? All right, bro. I don't know what that means. I'm assuming why don't I short sell? Is that what you're saying? I'm assuming Lorava. Let's see. Show you why. Show you something, blow your mind, son. There's Dow Jones. He probably means puts. He don't mean that. He ain't that sophisticated. So let's go to the daily. Now I'm gonna back up this to a weekly. So here's 3 years of trading, homie. Let's see. Since COVID, gone straight up. Gerald, why don't you do short sales? Market goes up. So if you walked into a casino and they said, hey, this game wins 70% of the time, this game wins 29% of the time, which game would you like to play, Mr. Peters? This one, you never blow out. This one, they will take all of your chips. Which game do you want to play, Mr. Peters? I think I'll take the one that they never take all my chips and I win. Yeah, I'll start. This is just philosophical. I'm not saying you can't catch a big move down. Of course you can. If you want to play that, now I'll hedge. I'll hedge. I'll hedge for sure. Now, if you're trading ego based, I get it. You got to get in there. Oh, I got to short it. I'm going to buy the VIX. I got to get it on the VIX, baby. I'm going to buy the VIX. So here's a monthly chart. This is 10 years. It's rigged, dude. I could take you back 100 years. My new mini course, I show this 100 years back. It just goes up. Yeah, not every stock. Get that? But I'm talking about the wave is to the upside, right? So I need to catch stocks in the wave. Oh, it's a rigged game, baby. Now, if your time frame drops, you're a day trader or swing trader, I get it. You could play the short side for sure. But since most of my trading is position trading, don't worry about it. I will short the cues and stuff like that from time to time. Here's another reason. Let's look at the VIX. So this is the VIX. Let's go to a weekly. Oh, this looks awesome. You should buy this. And people will chase this thing, trying to catch this. Happens every so often. That's it. That's all they want. They're trying to catch that. So back it up to a monthly. What you're seeing is a deterioration of this thing. It just goes down, down, down. Every once in a while it pops. When it does, it stays a very short period of time, then it goes down, 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 down. So if we looked at the S-Dow monthly, this is the inverse to the market. Look at it. What are we doing? Ryan, what website does he use for his opinions? Maybe if you owned my book, you would know. Stop being so greedy, man. Why are you so greedy, Ryan? Let's see. Come on, Gonzalez. What causes a stock price to jump before pre-market? You want to know what it really is? Big secret? People buy it. Here you go. Is why. People click buy. Let's see. What are your thoughts on TDC? TDOC. Fear and greed, baby. That's what moves the markets, not logic. I'm in TDOC. We tagged it, stage 4 decline, but it looks like it's trying to get back. So now let me tell you something about some of these stage 4 declines. I really thought we'd get a little movement to the downside because look how overbought the Qs were. We've had this massive move up. It's going to stop going up and it's going to go sideways and then we're going to come down. The weird thing is bonds have been going up with it. So where's the safe haven? I've been building a position in gold. Brand new stage 2 breakout. This will probably come back down tomorrow. I don't know what the safe haven is going to be. Maybe it's gold. Maybe it's Bitcoin. Been building a position in Bitcoin. See what I see? I hear all these people talking about Bitcoin. They're like, blah, 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 blah. And I'm like, you all sound stupid. It's a stage one. That's all it is. All that shit you're talking on YouTube, you have no idea what you're saying. All their dumb death crosses and hiding. Look, this is a stage one. This is all this is. Price is just moving sideways inside this zone. So you don't even need to know all that shit they're talking about, the news and this. Like, none of that matters. None of that'll help you. None of that on-chain block analysis. None of that shit means anything. When people start buying it, it will break out and it'll run and it'll go to the previous high. Like, this is exactly what it's going to do. That's it. And until then, it's going sideways. And then if it breaks down there, we back it up and look at the next one. None of them know shit. They don't know anything, man. None of them. They're just guessing. Look, why did it stop here? It stopped there before. So if you learn how to find boxes, you don't even need to know all this dumb shit they talk about. Look, there's a box, right? Price stop. That's where it's stopping now. Now, we could put Fibonacci ratios on here. Now it's a 50% retracement. Now we're going sideways. It's the fifth cycle of an Elliott wave. You start adding all that. But if you do all that, you're not doing the money flow. I don't know what you're doing. If Bitcoin breaks here, where's it going? Probably where it was before. I mean, downtown. Maybe you call that a box. Maybe. Some of them are saying 20,000. Probably more like 13,000. That's what I hope happens. Hope we go to 13,000. Everybody sells me. I own all the Bitcoin in the world. That would be great. It's a big drop, dude. That's another 100% or 50% down. What you gonna do when that happens? So the downside target, in my opinion, is 15,000. Upside target is about 60. Yeah, Nate says he'll be a crab. I just hit crab status. Crab status. Let's see. My man's asking about a biotech. CASI. They probably all look the same. CBay, CRD. Yep. So you see this? You see this? It looks exactly like CBay. Why is that? Because they're all trading exactly the same. Look. See the Jesus cross? Or as you candlestick lovers like to call the doji. See the doji? If we look at the stock he just asked me to look at, what do you see? The doji. It's the doji. You see RDF. It almost did a doji. All of them, all the biotechs are doing a doji, which is a little bit of a reversal signal. What about lobster status? I ain't no lobster yet. Gets 13,000, I guess I'll become one. You want the biotechs to get going because you got a limited mindset. You were a baller and patient. You'd be like, don't go up. Stay here at $6 so that I can buy 10,000 shares. I decided not to be a little bitch and I was going to get big positions. That takes time. I need the money. So you go to work and you start buying them. You say, well, what is CRDF? What do they think it's worth? What if I wasn't scared? If I didn't operate in fear? What if I actually believed in this shit? What would it be? Most people don't believe. You just think you believe. You're like, oh, I really wish they'd get going. No, you don't. I just did a whole fucking hour on that. You don't wish they'd get going. You wish you had larger positions down lower. That's what you wish. Not that you wish it'd go up and be over. So your 200 shares can become $2,400. That's not what you want, man. We possibly have a fucking lifetime. You have an opportunity right now to buy biotechs cheaper than I've seen in a long time. You know what I hear people saying? I wish it'd go up. Really? Because I wish you'd get some money and buy some more shares. That's what I wish. I wish to be rich and prosperous. And the only way I know to do that is to buy shares. So how about instead of wishing they'd go up and then we don't have any more opportunity, we figure out how to get more shares. Look at some of these, man. Look at some of these. They're not going out of business. They're just out of favor right now. They're out of favor right now. Look at this MBRX. Swear to God. When it gets to 850, the first person that says to me, man, I knew I should have bought more. I'm going to just vomit on myself. When the stock is 850, it will be just a matter of time. They all catch their day. Look at that. They got a $16 target. What if these people here are just half stupid? Now he's only a five-star analyst, and this guy just started work. We ain't listening to Jonathan. So these two here have been at it for a minute, and they both have 300% targets. What if they accidentally get it half right? Half. What if it goes halfway there to $8 right here? It's $3.56 right now. I could show you 50 of these stocks, and they're all down. When an entire sector goes down, that is a massive buying opportunity. Now, when it's just one stock, could be a problem. Get it? Could be a problem. But what if we change the negativity to a positive? That's what I'm saying. And then this is what traders do. When it's down low, they bitch, and when it's up high, they bitch. Oh, I should have bought more. Oh, I knew I shouldn't have bought that stock. And then it goes up. Oh, I wish I wouldn't have sold so soon. And it's just constant bitching and complaining, man, instead of being in the money flow. There are so many biotech stocks. And buy the ETF. Buy the junior index. So if you have my thing, we talk about setting up these little folders, right? Let's go over here. Let's find something. Let's see. Pharmaceutical. Let's don't go. What was that one? So watch. ACRX. Jesus Cross. Doji, right? They're all connected. What is this one? Oh, this was Aerial Pharmaceutical. This one's breaking out. ARGX. They're all moving up, right? I just have tons of these folders of them. I was looking for an index I was going to show you. I found this new junior bio index. I can't remember the ticker symbol now. Yeah, OBSV. It's the one that I'm in, OBSV. Let's check OB. Oh, man. $2. Are you shitting me? So when I first bought this, it was like $2 or $1.50 or something. We wrote it to $5. You know what everyone told me? They should have bought more. I was like, really? Then it came back. It got down to $2, and everybody's like, what's wrong with this stock, Gerald? Nothing. Trying to help you out. Like the stage 4s, this is for you, man. That's how God rewards you. The only way to get a stock up is to take it down. The only way to make money on stocks going up is you first have to take them down, right? We got to take them down. When you get this out of whack, you're the dummy buying stocks up here. So there was a guy who bought this stock right here. Why? Why would you buy a stock after it did? It went from way down here all the way up to here, and now you're buying up here. So if you have charts, you read my book, you will never do that ever again, ever. You will always seek to buy bottoms, meaning the moving averages cross, they come on this side, and then you're waiting for them to stop, start going sideways, and then you're buying these sideways. You're buying into these. Why? So you can catch an Atos. Didn't Chris Johnson buy a Lamborghini from, was it Atos or AMC? If we're just looking at this, when's the best time to buy it? Oh, man. Below that yellow line, right? Moving sideways on an extreme RSI, right? Coming off there, these bottoms. See? Now look, now we don't want to buy. So think of that. So you look at OBSV and all these are setting up, man. Right? Even if we, oh yeah, that was it, that IBBJ. That's a good one for those junior biotech index. If you don't want to buy just one stock, was Was it AMC? Best time to buy AMC, right? It's on the other side of the green line when it's going sideways. You want to buy up here. Now it's pulling back. Good. Needs to come down, then we can do this again. This game is going to keep playing with AMC. You don't need to get all out and all in. You just need to play the game with AMC. So imagine you stayed with it, man, doing that. I like how you email us and say, I know you didn't read my book. You didn't. And I give my book out. They don't read it. No, they don't read it based on the questions. I'll get the book. Now, see, Chris read the book. That's how he got rich so fast. One of the reasons. He read it and actually did it. He started buying Dogs of the Dow stocks. He just took his money and started buying them. He took his money and started buying real estate. He already knew the business side, right? Like, you just start doing it, man. Super simple. You got to have faith in it. Let's see. Then we'll get off here, man. Evelyn, I got to do some work. I got to get that course to you. I'm almost done. Woo! Look at this. This is beautiful. This beautiful money flow chart. So go find those days where price sets up in a box and closes above that 5. That's what we're looking for. Those are the days. It's the lowest price you can get it for, right? That is more valuable on extreme points when it's coming when it's coming off an extreme than up in here. So when you see a stock first starts to sell off, and you kind of get a little box here, you need to understand these first ones. If this is not extreme, these are high risk stage ones. The low risk stage one is after it's gone extreme. Hope that makes sense. That's why you don't see me buy those a lot. Now, if it's a runaway, that's what's going to happen. It's just going to barely pull back and run. So it's almost like the yin and yang of it, right? Like if you say, well, I don't want to buy it because I really want to get it cheaper, and then it doesn't come cheaper, and then it breaks, and then it doesn't come cheaper, and then it breaks, you're going to miss it. So you better, having a little insight into the company could help you with that. Like Tesla is known for doing that. So if you're trading Tesla, that may be a little different on this stage one. But if you're playing one that does these big, long swipes, man, probably give it a little room, man. How do you determine when to take profit versus stay in a trade? I keep losing my money because I didn't take profit. Well, K. Smith, if you weren't so greedy and buy my book, you would know. First thing we're going to use is the RSI. When the RSI goes extreme, you need to sell some. And we're going to use previous high. Right here, you're going to learn this pattern. So if you learn what a stage one is and a stage two breakout, you know when to take profit. Taking profit's easy. Not being greedy. Buy the book. PRT going down more in your opinion. No idea where PLTR is going. It's fair value right now, according to the analysts. It's in a stage 4 decline. So yeah, I'm just going to assume it's going lower until it gets above this red line and creates a box. So, I mean, it's probably going to could come back into this. I just assume it will. It'll come back into this 20 zone till it breaks, breaks out. Yeah, I didn't sell any on this. Just hug it. Let it come in. I hope it goes down. I hope it goes to 18, actually, to be honest. Stays there a minute. I can get a few more shares before we run up. I don't see that happening, but, it's probably not going much lower here. But the problem is, look at the Qs, man. The wind is way overbought, dude. So if that starts to come down, the Qs could very healthily, healthfully. It'd be very healthy if the Qs pulled back to here. This is when all your friends pee their pants and start looking for protection and to buy the VIX. And then we would start to nibble because that stage 1 would start being built for the next leg up, right? Don't you think it'll go up? Yes, I do. Doesn't mean it can't go down first. They call that trading, son. Up, down, up, down, up, down. That's called trading. If you just think it's going to go up, that's called investing. Just buy it and hold it. Voila, investing. Trading is moving in and out. So there's day trading. There's day trading, which is comprised of scalpers and momentum traders and all that bullshit. And then there's swing trading, 3, 4, 5 days, maybe 2 weeks. Then there's position trading, what I do mostly. And then there's buy and hold. Now, what most buy and holders do is they buy and hold, but they actually kind of position trade. They don't really buy and hold. The average person holds a stock like 3.2 years. Terrible. This is your big question. What is my thought of buying index funds and holding long term? Guessing you're new. Must be new to the stock market. Here's what my man at. Let me show you your question, bro. Each one of these little bars is a month. Each little bar you see here is 1 month. So here's your question. Here's 10 years of the stock market. What do I think about buying and holding index? I think that's a good idea. What do you think? Think that's a good idea? So it's gone from $100, 2012, to $348. That's a 300% return, right? 300 and something, 200 something. So usually if someone asks me that question, I say, what are you doing now? And they say nothing. I say, yeah, it's a hell of a lot better idea than that. So that's my answer to that question usually is, in all honesty, they'll say, well, what are you investing in now? And they'll say nothing. I say, well, then I think it's a glorious idea. Because doing nothing is dumb. So if you want to be dumb, do nothing. If you want to be smart, yeah, buy an index fund. Fine. I own some. S&P 500. Every time it crashes, I start buying index shares. I do not buy them while it's going up. I only buy them when it explodes down. Then I start nibbling on shares. So like in COVID, I bought some, 50, 60% ago, like whatever it was. So yeah, good idea. Now, another good idea is to learn about stocks, and then you can improve that return, in my opinion. I've got $300K in index funds in my college plan. God damn, somebody has some rich ass parents. And your parents must have been rich as hell, dude. They put $300K in a college fund for you? Where are you going, Harvard? Should I put it into something more aggressive? Yeah, that's what you should do, because you know better. Now, you never made $300K in your life, probably. But you know the best thing to do with it. Just throw it all in some Dogecoin. Here's what I would do in all seriousness. I would leave that money in an index fund and go get off your ass and do some work and earn some money. And when you've earned $300,000, make decisions on what to do with $300,000. That's what I would do. The reason I say that is you haven't created a mindset that can even create $300,000. And probably, I don't know you, maybe you have. But I'm just going to assume you haven't. That's why it's in a college fund. So I don't think you should play with money you haven't earned. I would leave it in an index fund, and then I go make me about 300 grand, and that'll help you make that decision. Because then you'll be like, wow, I would never risk that kind of money in something aggressive. Like, I would be smart and allocate it, and I would put some in real estate and some in index funds and some in some growth like I would probably take it to an advisor. You get what I'm saying? You shouldn't be trading money you've never made. At least in the beginning, until you learn something. And I get people that do this all the time. All of a sudden they come into 300 400,000, 500,000. They're like, what do you think I should do with it? Nothing. I think you should put it in an index fund and go learn. And it takes the audacity. I mean, it's just audacity. Oh, I'm just going to jump in the stock market, know what I'm doing. Are you serious? You don't think people go to fucking college for 8 years to study finance who then run hedge funds? They go to fucking college for 4 to 8 years, some of them 12 years, getting degrees in economics and finance and learn about arbitrage and options and have computers. And you're just going to roll up in there, take all of this money and put it to work as if you know what you're doing. That's literally the same as saying, I think I'm going to play pro basketball. No, you're not. You got to get invited, right? If you begin to, I mean, you really should approach it as sacred as that, man. Just assume you don't know what you're doing. Really would. You have an advisor and put that shit in an index. You know what? If you can get access to it on the real, why don't you go buy an apartment building and get rich? Like, get your credit straight, put all that money in an apartment building, get rich. That's what I would do. I get a lot of people, they're young, man. They're like 20, 21. They want to invest. Dude, first thing you want to do is make money, not invest. If you start investing early, you're going to have your money tied up in investments. And then when an opportunity comes, you may not be able to jump on it because you're tied up. Tax implications. It's inside of a Roth. If you've already structured yourself where now you can't make any big moves. You can't put 50 G's into a restaurant or buy a food truck or buy an apartment building. Like, you can't do the big moves because you've tied up your money. And what if you put it in there in front of a 2-year bear market or something? At 18, I'm not thinking about investing. I'm thinking about how can I make some money. That's what I would be thinking about. Get what I'm saying? I would do. First thing is learn to make money. You got to sell something, man. Not butt pics on Instagram either. You got to sell something real. I'm going to go look at my newsletter, man. Yeah, man. People always trying to tie their money up. And I know why. You listen to Dave Ramsey and these other guys, and they start saying, if the power of investing early, if you start investing early, you're going to have a whole bunch of money. But if you didn't notice, a whole bunch of money comes when you're old. So if you go look at an investment curve, it'll go like this. You're putting in a little bit, 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 right? And there's year 3. There's year 3 and year 5. Then you keep putting into your IRA. You're putting in a little bit and it's growing a little bit. And then there's your 9, and then 10, right? And then around, like year 45 or something, it starts to get way up here. What I would advocate is if you go learn to make a bunch of money first, then we can just jump up here. Why don't we just skip all this? Like, let's skip all the little money. Let's just jump into the big money. Oh, but in that guy's case, I mean, you got 300K. Jesus. It would depend, man. Sitting at 24 trying to buy a house got me. Right. That's the move if you're young, dude. That's the move, man. Go buy some old fucked up house. It's going to take a lot of repairs, a lot of money. You just do it over 2 years. Just go to work, come home, work on it. You live in one of the rooms. You guys are doing drywall. Save up money, have the plumbers come do their part. You save up money, you have them come fix the electric. You do the tile yourself. You put in the flooring yourself. You figure out how to put a ceiling fan in. You put nice ones, all new utilities, right? You fix the driveway. You bring in, do some landscaping. You live there for about 2 years. And then when you flip it, it's all tax. You live there 2 years, it's tax free. Uh-huh. Well, Gerald, they're so expensive. I know. Why you want one? People always tell me that they're expensive. I know. That's why you want one. You want expensive shit. As a general rule, it's price point where DS stopped. So we're looking at loading back up on DS, right? The only thing's got me a little nervous. We got this level right here. So is this a box? Nope. What do we need to see? We need to see it go sideways, right? So I'm watching. I want to see it get above that 5-day moving average to get above it. And then what? Side up target. What is DS worth? What about space? We already covered space. It has to come in. It's gonna be the start over. 64% upside. It's giving away money today. Watch this DS. Same thing. These are all the same. Market's overbought, dude. We're fixing to have a sell off. Yeah, this is a good stock. I sold some. Sold some into this strength here. Why? RSI extreme, right? We sold some, it's pulling back. Now I'm just waiting. You're like, would I buy here? Not me. No, because I like to buy low. Rather buy the stage one and then the breakout. This is neither. Now, if it holds here and keeps going sideways, you could make a case to add to it. Too soon yet. Too soon yet. Let's see what's. Yeah, coin's a breakout. So where was your true breakout? Right here. For our true breakout. Where's our first target? First target's going to be around 300. Here's what's going to happen. There's going to be people that bought it higher than 300. The money flow doesn't give a shit where you bought it. Okay? It doesn't care. So when it hits 300, you're going to be hitting a target. It's going to be on extreme RSI and it's going to pull back. You're going to have to make the decision, are you going to cut it back? Now, if you trade based on ego, you could tell your girlfriend, I'm up 47%. And if that's why you trade, you're going to have a hard time trimming that. But if you're trading the money flow, you're watching price move. He says could hit 400, could hit 1,000, baby. Maybe it goes even higher. But yep, could hit 400 for sure. Previous high. But what if we hit 300? First target, cruise up to maybe 360. Second target, and then we go into a big ass sell off, pull back all the way back into this 260 again, and then we load up again. And then it takes 4 of these cycles of sideways up, sideways down, sideways up, sideways down. It takes 4 of these in 6 months, 7 months before it hits the 400. So they have a 382. You see how that changes things? All of a sudden you see the big picture, pillar number 7. So you understand these cycles don't happen in one thing. It might go through 10 money flow cycles, sideways up, sideways down, sideways up. It might go through 10 of those before finally hitting the $400 range. Now let's say it hits it. I need to own a hell of a lot less of it than I had down here, right? Why? There's no upside. If this is the price that it's worth, then that's what it's worth. So when you're thinking of, when you're position trading, which I try to advocate for, think of it like flipping a house. We don't know how long it's going to take. We got to fix this and fix that and fix this. We do the best we can, get it to it. And we're trying to get this price, right? Well, guess what? Shit, it might be a water break. Floor takes longer than we thought. Like this pattern takes a while to play out, right? And what if it pulls back? What are we doing? Well, if we're playing for the 400, we just let it come in, and then we let it set up again, right? Doing our stage 1. If you'll map all that out at the very beginning, the moment you take a trade, you're like, all right, if I was writing a check for the whole damn thing, what is it worth? You write that number down. That number needs to make this worth it. So that becomes true value. So that's my ultimate target, is that. So here's one, DFS. Here's the dilemma with that. Discover card. Here's what'll happen to you. They will hit that target, maybe do an earnings or two, and the analyst may raise it. That's how he gets to 500, dude. So I first trading DFS, at $49. And so at about $110, I dropped down to a half position. Should have bought this breakout and this breakout. Wrote it up. Didn't. It wasn't listed at that. And you see where it's at now. What is it? Right near true value, right? So, is this a bargain? No. It's at true value. And the S&P 500 is about to hit a 70 RSI, man. So, that's just using some common sense, right? So the market's overbought, almost 68. It was overbought yesterday, all-time highs. Discovers at true value. Do I want to put a lot of money in that? No. Nothing wrong with owning some, but I'm not putting a lot of money in it. I need some upside. So if we're looking at like AI, someone just mentioned it, moving sideways, right? Support, back in the box. What do we have? We have basically stage 2 that turned into a 1. Creating this big leg here. What are we waiting for? Breakout, right? Gonna run into trouble right around in here. And then our next target is up in here, right? Maybe here. I think I have 90 in the newsletter. 59 to 90. Can it hit 90? Well, the first one would be 70. That's $11 higher. But what is the target on it? This is a growth play. Not going to make some fundamental sense. They got a 101, dude. Jack Andrews. The average is 26% return. 66% of the time, old Jack is right. These other like, look at this guy. 73% of the time, he's right. He likes it. Look at this guy. 76% of the time, he's right. He likes it. Is it cheap? I like it. So you see, there's a big setup there. There's a big return. But the overhead, the weight, if the Q's turn down, the stock ain't going up. So then you're like, well, what's taking so long? It's giving you a chance to buy more. Just start accumulating, just slowly, man. Buy a few more. Market pulls back, build up that position. Why? Because we're selling it much higher. Much higher, right? Says, hey, Gerald, do you use price action only? No. You must be new, son. Go to my newsletter. Using the 5-day, 10-day, 20-day RSI, support and resistance, and the MACD. But what I'm using is the way God moves the market. There. All that bullshit is wrong. This is how the market moves. It's like this. Everything else is bullshit. This is how it moves. Now, that may not be true. That's what I believe. You can only trade what you believe. So everything else in your mind that isn't this is just wrong to me. It's just wrong. So if I go look at that pattern and I go look at gold and I say, well, what is happening? Look at it. I say, wow, that looks a lot like that pattern. Anyways, now we're breaking out. So where's our target? Here. Why? Because that would be the pattern, right? Sideways. Yeah, it's price action mixed with fundamentals and technical. Technical analysis, a lot of people try to use it predictive. They don't know what the fuck they're doing. Can't predict shit. You have no idea. You might could run some mathematical equations where right now, if you did, they don't know, man. Just because it crosses doesn't mean we assume. We assume. Like your comment to me, or do you just use RSI? Shit, if you just use RSI, you'd have more money. Why? Because you'd only buy bottoms. You'd sell tops. Why do you need anything else, son? What else do you need? What other bullshit are you going to add to this to make it confusing? What other dumb shit you got? Besides just waiting for the extreme, catching it breaking above the 5, and then selling the opposite extreme. What else would you like to add to that besides just buying low and selling highs? What do you think makes sense? Should we add a Fibonacci fucking ratio to it? That'll somehow make it better. Should we do an Elliott wave? Should we do a momentum? Should we drop down to a 5-minute or switch it to should we look for candlestick patterns? What other nonsense should we add to the chart? I always offend people when what about the 50-day? Don't care. It's completely useless. So let's put that on gold. Like, it's completely useless. I always offend people when I say these things. Good. You're believing dumb things. So let's add the 50. Let's make it solid, thick. Let's make that bad boy pink. Let's see what it. All right. Let's see. If we bought stocks that held the 50-day and then moved higher, there we go. We'd buy there, right? Yeah. Instead of doing that, let's buy here and here. That's the stage 1 and then the stage 2 breakout. Guess you'd sell over here when it broke the 50. Yeah, instead of doing that, why don't we use previous high and extreme RSI and sell there? Sounds better. And when it rolls over, right there, that's a sell zone too. 5, 10, 20 cross, breaking the box. That's a stage 4, right? I didn't make that up. Gold did it on its own. Just wrote about it like a decade ago. So as it breaks and starts to head, that's a stage 4 decline. How far is it going? No idea. Until it stops. And when it stops, it'll go sideways and the RSI will go extreme. Somebody says, well, if you're just using the RSI, what else do you need? We could throw a Fibonacci on here and do some sort of fucking mathematical retracement. Let's see. Put Elliott waves on there. You guys even know what I'm talking about? Let's see. So long, I don't even remember. Put them. I don't see where they are anymore. Let's see. You can. If you're pure swing trading, you could sell the whole position. I don't tend to do that much, but you could clean that up. That's a lot on that chart. Amy put you in stamp. Yeah, so the ones we're in, we are, I don't know, whoever's trading with or might be in. And you should do this, man. This little newsletter. This is my commentary on the market. So, let's see, trading log. So I'm just trying to say what I'm thinking, what I see happening. So I'm not guessing. I'm just telling you what I see happening. And then and you should do this. Make your own little trading log as you make them. I used to just write this on paper. I had a book. So as I'd make a move, I would write it. Like right here, I said, hey, go watch this video on page 40, The Rules of Money. I put it in the newsletter for you. You should go watch it. And then I just log my moves, right? And then we're watching. What are we doing down here? What are we doing? Let's see. Market status. This could determine how much I trim or not trim. Gee, hit the wrong button. Hold on. So where's the S&P right now? Where's gold? Where's oil? Where's bonds? And where's Bitcoin? What I need to know. Where are they at all times? So a little game you could play with yourself. I know you guys like doing that. Print these off. Try to see them in your head. Like you don't need to see a Bitcoin chart to know where Bitcoin is. Bitcoin's right now at the 20-day moving average. Why? Because I look at it hour on the hour. So if I come look, should just know. And you say, well, I can't do it. Yes, you can. Okay? Yes, you can. Stop it. You can go Kardashian. You can do Bitcoin. Like you can, it's not that complicated. You know where they're all at. Right at the 20. Going sideways. Where's oil? Let's see. You know oil, what is that going to hit? Exxon, all that kind of stuff. Yeah, we're still in VLD. Wouldn't you be in it? Why would you not be in VLDR? Like ETH and ETC. Come on. It's right there, dude. It's right back in the box. You almost could call that a buy signal. It's maybe a little early. Yeah, so like you just said, when it breaks that 20 and goes from a 3 to an obvious 4, and you've made a lot of money, go ahead and trim it, man. Trim it up. Take it down to what you're cool riding it down. Don't let the fact that, oh, well, 4 days ago it was way up here, now it's pulled back. Yeah, that's what happens in a state. It starts to pull back. And there's a difference. That's why we trim into strength so that we can make those decisions, in the down in a sell-off. So if you do most of your trimming into strength, don't worry when they sell off, if you want to cut them back, that's all right. You're going to get the money back. Don't worry about it. So VLDR, let's see what VLDR. You got a $19 target on the stock, man. These idiots are half right. But of all of these guys that got finance degrees from Yale and Harvard and Wharton business degrees, let's just pretend they know something. And they're half right. It's a hell of a lot higher, right? So this is a growth play. Below the 200, a lot of penny stocks, a lot of biotechs, a lot of these growth plays are really, 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 really cheap right now. I mean, look at Solo, look at IDEX. There are so many these good small cap penny stocks because the money, why? Why is it cheap? I keep getting asked that. That's why, man. Look at Apple. This takes money. You know how much money it takes to take Apple from here to here? Shit tons of money. So when you think this is the money flow, man, look, that says sell all over it. You should sell into strength, right? Why? Because we're buying weakness, buying the stage one. So if you look at Apple, you can see the pattern clear as day. Sideways up, sideways down, sideways up, right? It's just flowing through the money flow. Well, that takes a shit ton of money. Push that up. All that money's coming from crypto, biotechs, penny stocks. That's why they're not going any higher, because all that money. What do you think's going to happen when these guys start ringing the register? They're going to look for alpha. Where's the alpha? Oh, they're going to be like, look over there at AI, man. That thing's on sale. And money's going to flow from the big cap tech companies into these penny stocks and biotechs as they look for alpha. You don't think these hedge funds sit around thinking, hey, what's on sale? What's cheap? You think they're selling their cheap stocks to buy the expensive stocks? You really think they're doing that? Smartest guys on fucking planet Earth are sitting in a room going, I think I'll sell these cheap ones to buy the really expensive ones. Nobody's doing that. So at some point, they're going to turn their attention. They're going to be like, wow, gold is cheap, which is what's happening right now. starting to move higher. It'll break out and run. Bonds, they eventually got cheap. Oil eventually got cheap. And then gold, then it took off, right? Alt's still a play. I made some money before the news. Yeah, it's a play, man. It's almost a buy again. I haven't added yet. Why? I got more discipline than you. Got to get up above this 5. We got to put in a box. Look how far away we are. We can't trust this, man. It's a broken family. Moving out, everything's broken. Went down too far, too fast. We're not selling it. We don't even know what happened. You got to go read and see what happened. You don't know if you should sell it. Maybe you should buy it. One man's foreclosure is another man's opportunity. The only reason this bothers you is you owned it up here. If you didn't own it up here, it's an opportunity. Let me say that again for the real slow kids in the back. The only reason this bothers you is you owned it up here. If you didn't own it up here, this is now an opportunity. Because the guy that bought it right here, mindset, money, method. So the guy that bought it right here, he thinks it's pretty cool. You bought it over here, you're not too happy. It's the same stock, bro. What's the difference? The difference is where you bought it, right? Nobody gives a shit where you bought it. Nobody. You're the only one that cares. Nobody at E-Trade cares at all. Nobody. Nobody on earth cares but you. So if we know that, we know this pattern, know our pattern, why you gotta be so mean? I'm not. I'm trying to help you. I'm trying to save you from yourself. What do we see? Stage 4. Now what's happening? Stage 1. But guess what? Can't trust it, man. This is broken. This is going to take a while. It's going to take weeks to months to fix. What does that give you? Opportunity, bro. Maybe. Go read it. Now, if you trade biotech, should it surprise you from time to time when stocks you own don't meet their clinical trials? No. It's like being a boxer, and when you get punched in the face, you're like, why did he hit me? It's part of the game. So if you're going to play these stocks, you better be cool with this kind of drop, this kind of action. This happens a lot, man. Especially if you're wanting to ride them higher. Let's go to a week. Alt's been here before. Might go to $2. It went from $2 to $30. Now it's going from $30 to $9 right at support. Who knows, right? We'll see. Why you got to have more than one position. Yeah. Any stock is coming back. It's just the money's not in it right now. Really not. So if you look at the ones that I own, you notice I haven't been adding any new ones. I don't need to add any new ones, man. I got a bunch of good ones. What I need to do is build these up. Page are we on? Right? I don't need new ones. I need to build these up. So I try to track them. These are all buyable stage 1s right now. These are stage 2s. So what do we got? So I own all of these. DVAX is breaking out right now. DVAX. Let's see, DVAX. Actually, it was back here, right? Break. Still in this one, back above the 20. That's pretty cool. I've been trading around this one for a minute, though. What is the target on DVAX? I like this company. It's very volatile. $18, dude. That is a long ways up. So we could be trading this for a long time. We could be sad and then happy and then really sad and then need to kick that cat in the butt. It's mean, dude. Sell off, nice sideways, nice stage 2. This stock sometimes will fall into the flow perfect, then it just loses it. I know that 50 doesn't do you any good, man. I don't understand why people use it. Let me remove it. It just looks bad, doesn't it? Take that out of there. I can help you with anything. Let me save you from the 50-day moving average. All right, man. That's it. I got to get to work. Sure of a hipster going to Starbucks with Shih Tzus. Bought and read all of your books. Thank you. Multiple email replies about please subscribe. All right, John. John. Sounds good, bro. Yeah, we need to make a fat cat a finance shirt, probably. It's actually a good idea. We need to think on that. Yeah, I'm sure you guys know if you don't. I'm gonna put it in the newsletter. But if you just go to that Money Flow merch, we had some shirts made. I get asked that all the time, so we made some. I have them. Been using that as a logo, so other people ask me where to get them. We only have two right now, or two colors right now, white and green. What variations of it? The Money Flow gang. I was just gonna make this one. You had to be in our group, but I'll open it. This one, we got some female ones coming. Get the cup though, so you can do the right thing in the morning. All right, man. You guys be good. Sir, thank you.